Oliver, today we're talking about ICAP, the interbroker dealer, and it's had a pretty torrid time of it post-Libor, but the share price looked like it was having a bit of a rally year to date, and now some news yesterday.
Yeah, news is about an interest rate swap benchmark that ICAP administers, and it's being investigated by regulators in the US who are investigating manipulation. We don't know exactly what the outcome of this is going to be, but combined with the Libor investigation, which is still underway, it's another piece of bad news for ICAP.
And do we have any idea of the potential scale of the cost?
It's hard to know at the moment with this latest investigation. Analysts think that the Libor fine, if there is one, will come to around £80 million, much lower than the big banks, but then it's a much smaller company and it's all based on ability to pay. So they think about £80 million, and then if there's another fine, it'll be extra on top of that.
So you've got one-off things like Libor, you've got one-off things like potential interest rate swap manipulation. The fundamentals of the business, how's that going?
Also not great, unfortunately, if you're an ICAP shareholder. They're an interdealer broker, so they deal between brokers, and volumes have been very poor, particularly in the areas in which they specialise, such as FX and interest rates. Interest rates are going nowhere, volumes of these deals are going nowhere, so it's particularly bad for their business. And on top of that, there's potentially more regulation. A lot of what ICAP does is voice dealing, but the regulators across the world want that to shift more to electronic dealing, so that's another possible cloud on the horizon.
So like all the investment banks, it's got just sort of economic related volume problem. Like the banks again, I guess, it's got the regulatory stuff, but everything has a price. The share price has fallen a long way. How does it look valuation-wise to you?
It looks fairly cheap. The share price has almost halved in the past couple of years, and it's now on about 9 times earnings, which given the amount of bad news around, sort of isn't surprising. But if things start to pick up, if volumes start to come back, that can turn around really quickly. The share's up more than 1/10 in the first sort of 6 weeks or so this year as volumes started to come back a bit. So things can really turn around quite quickly, and potentially there's value in the share price.
Well, there's some upside and nowhere near as loathed as much as the banks are, so potentially interesting if things look brighter ever. Thank you very much for that update.